Hey, thanks for tuning in. Today is a review for the week ending June 18th, 2021. Quadruple witching is behind us. Volatility is back, and the bears showed up in volume to close the week. Right here, you have an outside reversal candle. Now, by itself, doesn't mean anything. You need to see a close below 414.92 this following week to confirm the reversal, which sets up 2 to 4 more candles before we would anticipate buy the dip crowd shows up. So that would imply 2 to 4 more weeks since we're looking at a weekly chart. That being the case, the last time she closed below the simple moving average 10 was October 26. But it was also the first time she had tested a rising 20. And this in and of itself was a correction. I see a similar correction playing out here. It almost seems inevitable that we're going to tag 400 this week. I don't like making predictions like that. I prefer to just react, but given what I see, it's certainly time to be a little cautious and protective. Not every sector looks like this, by the way. But if the SPY outside reversal candle leads to 2 to 4 more weeks of downside pressure, we could be heading to the 40. We could be heading 16% lower and filling some gaps down here. Again, if you were to just draw a trend line here and a trend line here, you can see we are very close to the risk for a seller, very far from risk if you're a buyer. We'll zoom into the daily just to give you a little more context, but the picture doesn't really change too much. I will say, though, there is a bullish divergence. PPO is above the zero line, but there's also a bearish divergence that's been going on since the June highs. Every single high in the S&P 500 has been on lower momentum. So that's not a good sign. And unfortunately, this is your bullish divergence low. Now you can argue, oh, well, we have some here, and we certainly do. We certainly do, right? And that being the case, one can remain bullish, right? We could come down here, fill this gap, go back up, and set another high. The structure that I see in this is really 1, 2, 3, 4, 5. Maybe an ending diagonal. I'm not really sure. It also doesn't really matter. The reality is we have a gap and go on volume. Fundamentally, the Fed gave the market everything they wanted. They said one word, and this is what you get. Now, technically speaking, all of these gaps will get filled at some point. Even the one down here at 326. Now, you break this bullish divergence on the daily that's been going on since the September low, then we're certainly opened for a tag of the 200. That's definitely incoming. In most corrections, they don't just go straight down. Let's take a look at some of the stronger sectors, though, right? So not everything looks like QQQ, and not everything looks like SPY. Same scenario here, where the weekly is setting up a PPO bullish setup and a bearish setup. So they're not really telling you the direction. You can use the moving averages to give you some clues. We're above the 20, above the 10, above the 40, above the 5, above all of them. That's bullish. The reality is every single high has been made on lower momentum. That is not a sustainable trend. This is not how you trend. Back here in March, you can see how you trend. And the PPO comes first, right? This thrust from the zero line all the way up to 8. And then price continued higher as PPO reset. That's actually really, really bullish. In fact, price went higher as PPO went lower. But that eventually ends, right? Eventually, she has to come back to the zero line, all right? Also, 3 tags again. These 3 pushes up on less and less volume is not necessarily very bullish. That being the case, you know, this little correction that began here created this little area of balance. You could call this, you know, a bunch of 3-wave moves. This last one certainly kind of looks impulsive, but the reality is this weekly bearish PPO is still in play, and you can't make new highs on lower momentum. It does not end well, right? Lower momentum, squeeze, reset. Highs on lower momentum, boom, reset, lower momentum, boom, back to the zero line. Has to come back to the zero line. It happens every single time. Oh, gee, we're making highs on lower momentum, boom, reset, boom, big correction. Now it's tech, guys, right? Everyone's going to buy the dip. You give a 25% correction in the Qs in 1 week, you're going to buy it. That being the case, I'm not projecting a 25% correction. I'm simply pointing out this line has to get down here. And until that happens, it is high risk for the Qs. But the chart looks good. I own the Qs. I haven't sold. I was a buyer of the Qs here. I sold up here. I bought back here. I did not sell here. Let's take a look at SMH. Another one that looks quite interesting. But here, you know, I'm not giving you this count and saying this is absolutely what's going to happen. I'm not. I'm structuring this count to show you that it's very possible we could be at the end of a 5-wave move. We have a steep correction here, a shallow correction here. PPO went back to the zero line. PPO is headed to the zero line. Now, this instance, the COVID plunge, that happened very quickly. Those are my favorite corrections. This correction is likely going to take the rest of the summer. And it's just going to do a bunch of this, you know, and remain within balance until PPO gets back down here. That's it. That's an outside reversal candle on the weekly, on volume. Price has a bearish momentum on the daily as she keeps going higher. And really just sideways chop. So the moving averages can rise to price. If you want to look at some of this chop and for clues on structure, etc., you can see this correction simply looked ABC zigzag-ish. Zigzag up, zigzag down, right? But, you know, it doesn't really matter how you label this. Again, you can try to master one thing thinking it's going to tell you what's going to happen next. It won't. Price is stuck. She's stuck. And if you define risk as blue for the bulls and risk as red for the bears, we're simply 3% away from your stop if you're short. And I'm 13% away from my stop if I'm long, right? That's not good risk reward for a bull. So it doesn't matter how you label it. It doesn't matter if it's below a declining or rising moving average. None of that matters. Here's your risk. Here's your higher lows. The reality, price is heading lower. And it's likely to happen this whole week. It is possible that you do have some count like this, where this really is all corrective in nature, and it is just some 1, 2, 3, ABC 4. We'll hit a 5 up here. That will spark a new all-time high, an impulse up, another ABC down, that didn't work out. Another ABC down. Man, my mouse is not working today. Into these moving averages after setting the high is another possibility. And then ultimately that would make this 1, 2, 3, 4, 5, and the larger picture count that I was giving you. Again, still looking for one leg up. That's it. Another ETF I like a lot, TAN. Similar story, another wave 4. And look, there's no debate what count this is. Here's the low. Here's the high, that's 1. Boom, 2, zigzag. Boom, 3. Oh my goodness, PPO all the way back at 0. Isn't that amazing? So until the PPO gets to the 0 line and the histogram starts curling up and the blue line starts curling up, the bears were in charge. You're now seeing the bulls show up again on this falling wedge breakout. This is not telling me that the market is going lower, right? This is telling me that she's captured weekly 10, weekly 5, and she's going to challenge the 40 and the 20, which she closed below during her correction. And if you look at the daily chart, you're starting to see this bullish divergence in PPO play out. A volume starting to come back. The structure here certainly could have been a 1-2 ready for 3. And again, if you're one of these guys who's just looking at moving averages and not considering Elliott Wave, you've missed this entire move. And they would say, well, that's not a big deal. I'm just looking for this move here. Well, I can tell you right now, this was a big deal. This was a nice move. And again, your risk when you were down here at $73 was very well defined. So your risk reward was very favorable here, despite being below a declining EMA 5 and SMA 10. So every system has their problems, but that's why I look at Elliott Wave, I look at moving average systems, trend following systems, and then the stuff that James Dalton put together on market profile, balance areas, etc. And between all three, I can generally get a good idea of risk reward, not what's going to happen next, but how to define a trading plan where the risk reward is heavily favorable. And if you look at some of the stocks that are inside some of these ETFs, right? This right here is a 50% move in 6 weeks. PPO was below the 0 line, curled up. We hit our ABC or WXY extension of the 618 at 113.92. Again, at 113.92, when you had this reversal candle, this is an outside bullish reversal candle, you had defined risk. What was your risk? The low of that candle, 108.88. Right? Well, price stayed below a downward sloping EMA 5. Yet the risk reward for a long trader at this moment in time was as good as it ever could be. So now that we're above all the moving averages, are you going to tell me that my risk is gone? Absolutely not. Right? Your risk, if this really is a 1, 2, 3, 4, 5, and we are going to complete a 5-wave move up on the weekly chart that does set a new all-time high, then you will stay above the 1 at 146.76. And as you see, all the selling volume tapered. The bulls showed back up. They closed inside the gap area and instantly filled the gap. Instantly filled it. Gap filled on Friday. Now, I am not recommending Monday morning you come out and buy ENPH. What I'm recommending is wait for the next correction on ENPH and see if this is your 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5, 5 wave up, or if I've miscounted this and this is in fact wave 1 and we need to do a retrace of this entire move, bringing back the moving averages into play. But when I look at this moving average profile, where I see the 50, sorry, the 40 below the 200, but all of the moving averages are rising and they will get back in the proper configuration. I see a new bull trend look. Back here, this was not the case. You see how your risk was far greater up here than it was down here. And again, only using moving averages, you would not have known that. You would have said, hey, we're above all the moving averages. Maybe they'll dip into the 40, but they'll probably get a buy. But in reality, what was happening? They were distributing to everyone during this period of time. And it was best for you to be looking for shorts or just avoid altogether. When you come into this fib extension, much better risk reward. And quite frankly, I did not play ENPH or TAN at all this entire period. They got me out right here. I thought for sure we would be pulling back, having a steeper correction, but we didn't get it. So I stayed out of that trade for a while, got back in down here, sold up here, bought back in down here, letting the rest ride. And if you look at, let's say, a couple other bad sectors to show some of the risk that remains in this environment, this is very bad for XLF. Very, very bad. And this is the problem with the market. All the trend followers were talking about, you need to buy XLF. XLF is leading higher. After XLF had already risen 60% in 6 months. No one wanted XLF down here when she was below a downward sloping SMA 40 and a downward sloping SMA 200. Notice the breakaway gap here to show that all of this was accumulation, markup, distribution, decline. All right, we've got a long way to go in my opinion. It's not going to be straight down. There will be some opportunity along the way. We have a bearish cross. I called that out at the top with this series of dojis on no volume and waning momentum. And at this point now, where would I like to buy XLF? We got to go to the monthly to show you what I see. All right, this could be a big problem. All right, is this your 1, 2, 3, 4, 5? We done? Or was this 1, 2, 3, 4, 5, A, B, C? Now we're in a brand new bull market, and that's wave 1. Any dips that you get into these moving averages will likely constitute a wave 2, whether at this point it certainly on the daily is looking like a zigzag lower. I would expect something like this, starting from the top, right? And come back in and test this level, 30 bucks. You got a gap down here, you got a gap here, you get a gap here. I mean, even 32, 31 would be an area of interest for me. A monthly gap. But that's the picture I see. And then all of a sudden you get incredible selling volume. The same amount of volume you had at the March plunge, where she dropped 44% in a month. Currently, XLF down 9% in 2 weeks from the top. Not enough. Simply not enough. What would be enough in my book? We can do two things to give us a clue. Let's assume that that 5-wave structure is complete. Why wouldn't it be, pretty amazing run for an ETF in such a short period of time? It opens up, depending on where we are in the structure. If this is a wave 1, then wave 2 retraces are often 50 to 75%. Somewhere down here. If this is a wave 4 within a context of a wave 5, we wouldn't retrace more than 50%. Either way, I need to see price come down low 30.54 to 32.30 before I'm interested again. And really this begs the question, can the market run without the financials? Also, the fact is she just tested a rising simple moving average 20 for the first time after closing above it. Everyone and their mother is bearish for good reason. But, you know, close below this gap, close below this level, close at the 20 on the weekly. You know, we'll see how this plays out. Best case scenario, something like that is in play. Let's move on to another ETF that I like, ARK. So you can go back to the very beginning of this ETF to make the clarity simple. Here's your low at 14. You can argue this is probably the high here, 2018, A, B, C, something like that. I'm not really sure. Maybe that's your 2 low here. This is your 3 high, looking for a 4, making this a 5 either way. It's almost impossible to draw this structure any other way, calling this a 2. It's either an A within the A, B, C, A down, A, B, C up, B, and then a 5-wave move down, C. Or this is your wave 4 low, and it's some, you know, a flat pattern or zigzag, right? At the end of the day, it doesn't matter. Again, does not matter what you label it. The moving averages are showing us that the trend is returning. PPO reached the bottom, went negative, curling up. Everything you want to see on the weekly. The daily is in an ascending channel. The daily broke this bearish divergence. The PPO is likely heading to 3, 5, and 6 before it cools off. And this POC, going back to the IPO, is at 123-ish. And that declining simple moving average 100. So the question will be, can the bulls get above and then hold this moving average configuration? The moving average configuration is what will provide you with demand in a trending market. When the market stops trending, the moving averages have no function. Right? So that's where you have to start looking at structure, Elliott wave, fibs, etc. And if you look at who's leading the ARK ETF, PLTR, right? We were buying PLTR down here. We were buying the ARK ETF down here as well. We do have a bullish divergence in PPO. PPO went negative, etc. Now we're back in play. I think that this particular chart looks very, very good and will likely provide opportunity if the market remains bullish. Finally, I will cover Tilray. This is very interesting to me. She could certainly rally this week. There's nothing that says she can't. Also, it might take her hitting 1568, 1485. Come Monday, she might recapture 1709. But in my experience, you know, a 26% decline into rising 20s, rising 40s is typically what you want to see. Your volume is declining. You've captured positive PPO. You then created a bearish cross, head back towards the 0 line. This is where your 1-2 starts to kick in. And that is definitely possible for this summer. You know, I can also just say, well, we're still in a descending channel, and until we escape this channel, there's no reason to touch this stock, right? We could also define risk reward as, you know, our distance from these fibs. So if you wanted to short, you know, sell at 1709, look to cover at 1568, etc. Not my style. It is possible, right, that this is done. This was an ABC up, and now we're heading all the way down to set a new low, right? This is your 1, this is your 2, and now we're just heading lower. And if the market's topped, and if this is some wave 5 top, this is exactly what I would anticipate. All the garbage stocks would head to 52-week / all-time lows. I'm not saying that's the case, right? I do count 1 or A, 2 or B, 3 or C. I do also consider this a possible wave 4. low. There's nothing that says that can't be a wave 4, and we've got one more high to complete the 5-wave move up. 1, 2, 3, 4, 5, right? Because every C has to be a 5-wave move. Again, there's a bullish divergence. The PPO is still heading to the 0 line, hasn't gotten there yet. Went from 30 to all the way down to 3. And that's just how this works. And this descending channel will push price all the way to this uptrend by sometime this summer. Losing the 10 and EMA 5 on the weekly is a clue, but again, does not make the trend, right? You have to find acceptance below the 40 for there to be a change in character. The slope of the 40 is up, the slope of the 20 is up, and the PPO line is basically at 0. And this is certainly impulsive in nature, and you can definitely argue that we are just correcting lower over time and price until a new catalyst or the market changes. And the last chart we're going to look at here, well, we'll look at 2 more. We'll look at GDX, and then we'll look at oil. This is bad. This is real bad. But one can certainly argue maybe this is impulsive in nature. But I'm not kind of getting that, right? Here I do see overlap between this low and this high. And now we have massive volume on the break lower. Close below this gap, never bullish. What type of gap is this? The volume, you're below POC, going back years. So these are all trapped buyers now. These are trapped longs, and they're trying to capitulate. They're going lower, can't get out fast enough. I did buy on the 17th and then sold at open on the 18th. I took a small loss. You can see these clusters, though, what they do at the top and bottom to stop price from going lower or higher. It'll be very interesting to see, but 3064, sorry, is likely to break. And if you look at the weekly charts, well, this is a problem. This is a big problem, right? There is no bullish divergence really playing out. You certainly could argue that this is bullish, this was impulsive, and this is all corrective. However, this is a nasty reversal candle on volume. Now again, the slope of the 40's down, 20's down. Really, I'm not sure what can happen. Best case scenario, bulls recapture all of these, put in a doji this week, and then go higher from there. It's an avoid for me. I'm not touching gold. ExxonMobil, I just sold this here. This is the 3rd high we've seen now on lower and lower momentum, power of 3. I was a buyer down here on this bullish divergence, and I added here and here. Bought some options as well. It was a great trade for me, and I'm kind of done. I sold all of it at $62 on Friday. I don't like the look of this chart anymore. It's giving me this look above and fail look on rising, on highs that rise on lower momentum. It's not for me. And really, the monthly, right? 1, 2. I mean, maybe we're in wave 3 and maybe we're heading all the way back up here. Happy to participate. I think the next buy side is down here, right? I think the 40 needs to come up, and by the time it does, price will get back down here and it'll be a buy again. And the last thing we'll talk about is TLT. Everyone's going to be talking about TLT now. We do have a bullish cross. It is approaching a downward sloping 40. We have recaptured. We do have the volume confirming. We closed at the high on the week. Certainly looks inverted to some of these other charts that we were looking at. So, let's take a look at the structure. This is the only way I see it. ABC up, ABC down. and we're in the midst of a 5-wave move up right now. This is a downward sloping 40, 1618's at 147, got a gap at 148. I don't see her getting above 148 at this point. So if you were to just simply draw risk reward, reward's 2%. Your risk is 2, 3%, maybe 4%. Hardly a 1-to-1 setup. Simply trying to point out that, the structure on the weekly certainly could be 1, 2, 3, 4, 5, a massive ABC, a 618 retrace, recapture of the 618 on volume, and now heading to recapture the 50. So this is all very bullish. And if in fact she's got a lot more in the tank, sorry, the mouse is not working great. If she's got a lot more in the tank, I'd say at most up to this red line. And that concludes the video. I hope you enjoyed the content. If you like what we're doing here, check us out on Twitter, MarketWizard87. I'll check you at the next video.